Thanks for joining us. I'm Marlon Bowling with you, and we are going to be visiting right now with Brian Hoops of Midwest Market Solutions. And he is based in Springfield, Missouri, where it's very intriguing. Brian, I can't wait to get your input on what's going on with the crop conditions in Missouri. I was just looking here at our corn condition rating in Missouri. It comes up almost near the bottom of the list of all corn producing states, at only 33% of Missouri's corn crop in good to excellent condition. Looks like about 25% rated poor to very poor. Now, there are some showers, as Tim Ross just pointed out, moving across Kansas and Nebraska, maybe headed that direction. Do you think that will be enough to actually help the Missouri crop or not?
Well, it's going to help kind of stabilize things. They're going to need more rain than this rain shower to really improve it. Not only is the corn crop suffering in Missouri, but the pasture lands are as well, and that's a major component of feed usage. So it's, pasture ratings there increasing the poor to very poor ratings 26% over the last couple of weeks. So there's definitely being felt, some of the drought effects being felt in this state of Missouri.
Let's look at our prices right now, Brian. I want to get your thoughts on what the market is doing today. Now, the corn market, after these numbers came out yesterday, showing a 3 percentage point decline in the national corn condition. We are now 5 1/4 on September corn. It's priced at $3.47. We have December new crop 5 1/2 higher at $3.60 3/4. Soybean trade has really gone in fits and starts, but it has had some significant gains here today. August 10 1/2 higher now at $8.40. And we have November now 10 1/4 higher at $8.56 per bushel. Yeah, it's almost 4 cents off of its high of the day, but still fairly strong nonetheless. How encouraged are you by the action you're seeing in the corn and soybeans today?
Yeah, it's a step in the right direction. The corn and soybean markets had not only become technically extremely oversold, but basis levels starting to improve. And that's one thing that you can watch very closely to give you indication of what direction the futures are going to take. The American farmer is not a willing seller whatsoever after this big break in prices. If they have some old crop, they're going to try and hold on and see if we get some sort of recovery since they've came this far. There's really no reason to make new crop sales right now. There's going to be better marketing opportunities down the road. So basis levels are improving. That's a sign that there's good demand and a lack of farmers selling, giving us a rally in the futures market. So we're getting some tactical buying as well. We had an outside day higher in soybeans and meal, and we're seeing some follow-through buying as a result. So we haven't broken any type of a major downtrend line or anything like that. They're pretty easy to find on the charts, but we are coming off of our contract lows and our low area. And it's certainly encouraging that this market does not go down every day.
And looking at our wheat prices right now, we'll start with Chicago wheat and zero in on that September contract. Even it is 10 3/4 higher now at $4.99 1/4. It did peak above $5 there momentarily earlier this morning. On the Kansas City market, we have September now quoted at $4.94 1/4, and that one is up 9 3/4 cents. And on the Minneapolis trade, we have September wheat there 4 higher at $5.32 1/4. That represents our spring wheat market, and the spring wheat is still about 80% good to excellent condition. All right, we'll come back in a moment, and we will examine our livestock trade with Brian Hoops right after this. And we are back with you to take a look at our market action along with Brian Hoops. We'll get to Brian in just a second. Wanted to touch on this cotton market action taking place today with the grain markets kind of turning around and getting support. The cotton market has also turned from going lower early in the trading session to going higher now. October is up 23 points. We have December new crop cotton 30 points higher now at 88.07 cents per pound. On the crude oil trade and West Texas Intermediate crude, we are now 25 cents higher. Check that. I'm sorry, that was the wrong screen there. We have the August crude oil down 60 at 67.46 per barrel right now. And September down 27. All the deferreds are higher. There you go. And if you take a look at the dollar value, we have that dollar index on September 250 points higher. There you go. Now let's go back to Brian Hoops and take a look at our livestock trade. On the live cattle market here, Brian, we have had this market kind of indecisive so far here today. As we look at our futures trade in Chicago, we are now back on the plus side again. We have August live cattle up 36. It's trading at 107.28 per hundredweight. And now you have October 55 higher at 109.20, so it's about 70 cents off of our earlier low of the day. It chopped around quite a bit in the first 10 minutes of trade. On the feeder cattle trade, you now have August trading a nickel higher at 152.43. It's still at that, where it goes back and forth above unchanged or below about every other half hour. September 13 higher right now at 152.58, and October 17 higher. Lean hog trade, we early on in the day had the nearby August higher, the rest were lower. Now they're all lower. August down 30 at 68.90. October down $1.02 now at 52.98. So Brian, your thoughts on what's going on here in this livestock market activity on a Tuesday so far?
Well, this is a major fundamental week for the cattle market. We have the livestock slaughter report released on Thursday. We have cattle on feed on Friday, biannual cattle report on Friday as well. And so these reports are going to provide estimates of the cow-calf and feeder cattle supplies, and it's really kind of a key for long-term direction. USDA is expecting a big increase in supplies in the third and fourth quarter of this year, and that's likely going to keep rally attempts in check on some of those deferred contracts. August has, rallied and narrowed up that deficit that it was holding to the current cash markets by a considerable margin. And so we may not see much more upside appreciation in the August, especially ahead of those key reports near the end of the week.
Okay, those reports will come out after the markets close on Friday. On the hog side of things, we made new contract lows here in the recent days, and it tried to bounce off of that, but it's kind of struggling today. So there is some thought there in the trade that it's going to hover around here, maybe at least until we get some certainty in this trade issue here. But Brian, I appreciate all the comments on the markets here today, and glad to have you with us to talk with our audience. Appreciate it, sir.
Sounds good. Thanks for calling.
You bet. Brian Hoops of Midwest Market Solutions. He is based in Springfield, Missouri.